this particular video, I want to share something that is very key and profound to your trading career as a whole, because it's what I believe and firmly believe that it's the huge missing link right now, currently in the entire trading industry. Right now, that's why the stats state that almost 90 to 95% of traders, they are really making consistent, serious money out of the markets. Is basically due to the point that I'm about to state in this video, and it will help you to make sure that you've liked the video, you share the video, if any possible, you also subscribe to the channel, and also you don't miss the next coming videos as well, because I'll be talking more and more deep things about the forex market that most institutions, they don't really want people to be sharing this stuff, but I'm going to be so generous and make sure that I share. So make sure you stick around and watch up until the end. So the most important aspect of trading that most retail traders are still yet to discover. Number one is that institutions are the ones who move price. So this point, it's a point that most retail traders are still yet to even agree that institutions are the ones that move price. They're still even not even aware of this. Most they think price is just moving randomly, or price is being moved by even the retail traders. Retail traders, most of them, they don't even have enough financial capacity to move even 10 pips of price on the market. So institutions, they're the ones who are moving price. And for them to move that price, they don't just move it randomly. They follow what we call an institutional price action. So institutional price action, what most retail traders don't realize is that institutional price action is way different from your normal retail price action. Your normal retail price action, this is whereby they've taught you all about support and the resistance. They've taught you about trend lines. They've taught you about um all sorts of things, right? They've taught you about patterns, retail patterns. They've taught you about a lot of things, candlestick patterns, blah 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 blah. All of those, they fall under retail price action, and institutions, they feast on retail price action. What do I mean by feast on retail price action? What they normally do, they use retail price action concepts as liquidity to facilitate and to move price wherever they want to move it. The only time you only see retail price action being respected is only when that particular retail price action for that moment is in alignment with the institutional price action of the institutions at that particular point or that particular level. So that's the only time you see a retail price action pattern being respected. For example, let's say if it's a support or whatever, the only time or where you see, for example, even if let's say it's a bullish retail chart pattern, right? Let's say we have a bullish breakout, right? Let's say we have a breakout to the upside in a downward channel like this. So the only time you see this market buying like this is only when this retail price action at that particular point is in alignment with the current institutional price action at that point. So the huge missing link right now in the entire trading industry is institutional price action is rarely taught, number one. Number two, those that are trying to teach it, very few truly understand what really goes on institutional price action. Because once you understand institutional price action, you understand forex trading as a whole. You are a complete trader. When I mean a complete trader, you can't be manipulated. There's no manipulation that you ever undergo. There is no move that will ever happen on the market without your awareness of how and why it happened like that. The reason why most traders are confused now is because very few authentic people are coming to tell the real truth. Most people that are waking up to this truth of institutional price action, most of them, the few, the few, the few, the few that have realized that most of those few, they are even hiding with the information. They're even hiding with this truth. That's why you see even with the thumbnail of the video that I even placed a disclaimer that I'm mostly going to delete this video as soon as possible because of protecting myself as well from so many things. So make sure that you pay attention as much as possible and you get as much as possible from this video. So just to quickly go to the chat, let me quickly go to the chat and show you some field examples of what I'm actually referring to when we say institutional price action is the ultimate missing link that has been missing for ages. It has been missing for decades, and it's high time now that we now expose. We now we now start to release the codes bit by bit. Obviously, won't release them all of them at once to the public like this. To the public. We won't release everything at once. We'll just release them bit by bit, and make sure that we move in truth. So people, they are still yet to be reviewed to the real truth of how the market moves. That's one thing that I'm very confident to even say on a public platform like this, that people are still yet uh, uninformed about. Let me just open a new chart here without wasting much time. Let me just open a new chart on US 30, because that will be my first example for tonight. That will be the first pair that I'll use as an example for tonight, to express the point that the missing link in the entire forex trading industry, or in the trading industry right now, is basically institutional price action. I'm just going to do an institutional price action on US 30, giving you some practical examples of how the market was even moving and how it moved respecting institutional price action compared to how most people who were simply following what do you call this, normal retail price action, how they would have missed most of those moves that I'm going to show you. So I'm going to show you quite a lot of entries. The best thing that I can do now, I feel like, let me just do this. Let me just do a replay and start from, let me give you a practical example whereby I even show you the rest. I'll start with 2023, prove to you how you could have harnessed opportunities in the entire 2023, 2022, 2021, 2020. Even I can go as far as 2010, 2008, just simply proving to you the point that institutional price action is the ultimate missing link that most retail traders are yet to be informed about. Most of them, out of ego, they are still yet to even accept that it even exists. They still feel like no, those things don't exist and all that. So they still have an ego problem, a problem, a problem with their ego that they still need to fix. So people, they are still far from the truth. People, they are still far from the truth, and by the time they'll wake up, most of them, by the time, this is just an example of a trade that we took last week. We took this simple buy last week. That was institutional price action there. It that actually gave us that buy there. So let me just do a practical example here. Remember, I said I'm going to start with showing you 2023 and prove to you that the whole of 2023 there was nothing even confusing about how USD was moving. If you hear someone coming and telling you the way the market is moving, it's confusing. That person, they are actually also uninformed. They're actually uninformed of the happenings of the market. They're actually informed. So 2023, which was last year, it actually began. Where did it begin? Began around here, right? So the most important thing when it comes to institutional price action is to look at the markets as raw as they are. As raw as they are like this, you don't need any indicator, any whatever to confuse you. So here, just looking at structure like this, right? Here, this first pullback is what we call an inducement. And the inducement, the purpose of an inducement is basically to induce people that will think it's a change of character, that when the market comes back here, they are busy going to sell, right? Those are people who misunderstand institutional price action. They think they now understand it, but most people, they really even understand it. So after they induce like that, they'll come and go on to break structure like that. After they break structure, they will do the same similar thing up there. They will induce before the overall break of structure. Because they are still overall in bullish order flow, right? They are still in overall bullish order flow. This is a swing high. There's a swing higher high, swing higher low there. That's a swing higher high because of the adjustment. There's a swing higher low. So there's a lot of principles that govern institutional price action that people are still yet, still yet to even know. These things are deep things about the markets that people are still yet to know. Most of the traders right now, all they are aware of is trend lines, support and resistance, trend lines, support, of which the market is bigger than that. The market is bigger than that. That's why you see most of them, they still experience a lot of challenges. That's why they come up with all sort of schemes. Hey, account management. Hey, what this that. all for the sake of countering the effect of the defeat that they've been countering on the markets. That's why they come up with all sorts of schemes to compensate for that. But ultimately, they can't fully accept the truth that they are basically failing in the sense of articulating the real movement or the real nature in which the market moves. So here they tapped this order flow. This is an order flow to the downside. They tapped that level. And after tapping that level, remember this was last year in December. Last year, last year in January, I mean. So knowing this, that we are in overall bullish order flow, right? And here we induce to the downside. When I'm looking at it from a weekly perspective, when I'm looking at this structure of the market from a weekly perspective, this bearish market structure to the downside like this, they maintain it up until they reach where they want to reach. They maintain this whole movement to the downside up until they reach where they want to reach. For example, here they wanted to reach this level, right? If they wanted to reach this level, it means here there was no inducement. They never induced. This was the break. They came the first time, didn't even reach it. They came the second time as well. They didn't take that out. So there was no inducement basically. So there was no inducement there up until they reached the level. Then they induced right there, like that, right? So if you even go to, so on the weekly, just looking at the weekly, them succeeding to induce here, or them succeeding to change character there, let me say that, because the inducement will be this one, whereby they want the sellers to sell. Here, they basically are shooting up. So once they induce like this, like that, the only thing now for them left is to, once they do that, they can pull back, then they continue and continue up until they break structure. That will be the overall flow of the market for the rest of the year like that. So even if I go to the daily like this, even if I go to the daily time frame like this, on the daily time frame, you actually see that nothing literally happened. So even here, you see that even this adjustment that I'm saying, because according to institutional price action, there's a principle that says a weekly adjustment is basically a daily change of character. And most people are still yet to know that, but it's something that I'm just sharing with you here, out of generosity to see you. So here, they were flowing in bearish order flow, right? For that particular pullback, major pullback to the downside, they were flowing in bearish order flow. If they were flowing in bearish order flow, you were actually supposed to be taking sales all the way to the downside. It actually started here. It actually started here. This was an adjustment. If I'm going to mark my structure based on the daily, my adjustment here was actually that one up there. So after they induced there, then they broke structure here, right? Then they come and change character here. That's when I knew that my major pullback has begun, which was this one. So how was one supposed to take advantage of that sell or the sales to the downside? You're basically supposed to follow structure. How are you supposed to follow structure? As simple as this. As simple as this. After they broke there. So here, you were just supposed to be marking your structure, marking your levels. My lower high in this case, my lower high was this, my lower high, my lower low. So they will maintain this bearish flow up until they reach where they want to reach. Here, this was now my lower low. Here, the reason why it's one leg, this is basically one leg. If you look at this leg and this leg is one leg. So they are just the real move there, it was like down, up, down. Here, this one and this one is one thing. So this was one thing. That's why I say there was no inducement that ever happened there. Someone might be confused. What happened? What happened? Inducement. There's no inducement that happened there. It's all understanding structure that will make you to reach certain level of understanding like these ones that some of us are at. So here, this is literally what happened. This is all one leg. This leg and this leg is one leg. So even this push and this push, they are just consider this as one push. That's why there's nothing that literally happened there. Most people, they were actually confused. I remember when I was in season 2022, right? Many people, they actually thought this this was an adjustment, then they broke, then this is a change of character to an extent that when the market came back here, they were busy buying hard and they were wiped out. That's a lack of a misunderstanding of institutional price action. That's why I said in the beginning, The huge missing link right now in the entire trading industry is institutional price action. If you're watching this video, you're definitely blessed because this understanding of institutional price action is what will separate you from the majority of traders and what will make you to realize those big six-figure days, five, six, seven-figure days in no time without even once you fully understand what is going on. So as they were coming down like this, you're basically entering cells. This was a clear cell. They came back to this level. They came back to this level. That was a simple cell. Induced. After collecting inducement, you enter your cell, right? Obviously, you enter on the lower time frames, your 1 hour, 30 minute. You can actually get simple confirmations there. Let me see if I can get some confirmations on the lower time frames on that on that just those examples to the downside so that I prove to you that these things that we talk about are real and they're applicable. So here, obviously, there's a way to enter this bias, but that's a topic for another day. That's a topic for another day, not today. To enter the counter move. The counter move there will be the bias, but here I just want to show you how to enter the cell. So here, basically, it was actually here. Just this inducement could have given you the first cell. Then the change of character on the 30-minute here to the downside, it was just a confirmation that indeed we are now selling. But your entry was basically supposed to be right here. Upon the break there, you could have entered. Stop loss, you could have just placed it just here like this. Where is your TP? You just go back to the higher time frame where you enter the trade. You enter the trade at around the daily, right? You enter the trade at the daily. That's where you entered. Your TP is just there. Look at the risk to reward, how crazy it is. This can only be realized by institutional price action. So even as it was coming down from that leg to this leg, you could have also followed this this sub-internal structure because it remains the same up until they take out this leg, right? So meaning once this is a lower high, once they come down here, come back to it, this was a sell, you could have entered more cells there. Even if it came back, you would have entered more cells up until they take out the leg there. So you see how many opportunities were presented along the way as it was going. Even on the 1 hour, I think there were also other opportunities that you have entered here just on this level there as well. Even on 15-minute, I believe there was also another setup or another opportunity that was presented along the way there. So I don't want to waste much time there in 2022. Remember, 2022 will be a video of another day. So now we are focusing mainly on 2023. 2022 will be a topic for another day, whereby I'll describe to you how you would have entered and harnessed all these opportunities to downside. But that was just a quick example. So yeah, this was the change of character to the upside, meaning we're now bullish. As we are now bullish, we are simply following the principles of structure. The principles of structure. That's an adjustment. I always anticipate the adjustment to be wiped first before we go up, right? So here you can see that this order flow was retested. Here we also have another level. So all we do now is we play. We now just follow order flow. We are no, we now just follow order flow as raw as it is. If there are any changes, we'll just adjust to the change. We'll just adjust to the change. So here they've induced, which is beautiful. Them inducing like this, it's beautiful because I know that once I get my confirmation from here to enter the buys, I'll definitely strike on the buys as well to the upside. So if I go to the 4 hour like this, to the 4 hour, you realize that this major level wasn't tapped, but on the 4 hour, there's a level that was tapped, right? Which is which is a good thing, very good thing. It was tapped, and as it was tapped there like that, your entry, it was basically as simple as daylight because here you could have simply waited for something like this. Them inducing like that on the 4 hour, they actually made that a leg. After making that a leg, they're now shooting all the way to the upside, right? Because remember now they're now moving in bullish order flow. This is now your higher low because of that inducement. Your previous leg was actually up there. Your previous leg was actually up there, which is basically a higher high up there. So meaning once we now have a higher low, which is another principle of institutional price action, once we now have a higher low, price will go up. So here, where could you have placed your entry immediately after the inducement? You would have waited for a simple pull back into an extreme demand, pull back into an order block. That would be your entry. Very simple as day, as simple as day. You know, institutional price, the good part about institutional price action, once you now understand it, it simplifies everything. So here, this was where you were supposed to enter the trade. Can go even to 1 hour, right? But that's the same zone, right? That's the same zone. This was where our entry was supposed to be. Entry is there, stop loss is way below the zone. As simple as that. As simple as that. Where is your TP? This is how you now maximize. This is how you now maximize. You go back to the 4 hour. You want to identify where your maximum TP is. Your maximum TP, according to this, it's actually up there, right? That was your maximum TP. According to institutional price action, this trade is the entry is here, the exit is up there, right? For this particular entry. So it kept going and going and going. Remember, this was now in March last year. So the main trade for March last year. And it eventually went all the way up until TP was hit up there. I believe TP was hit. Yeah, definitely it had to be hit. Definitely. So I go back to the daily just to not waste much time. Not waste much time. Like this. So even when they gave you certain pullbacks like this, by they pull back to this demand on a lower time frame, you can even go back and get another entry there as well. Even on these areas like on areas like those, because them inducing to the upside like this, that's how they made this a leg on the daily. And notice 4 hour and even the lower time frames, they actually confirmed lower like that because obviously due to time frame confluence, the lower time frame will actually do the change of character or the inducement first before the daily. So the daily, it actually did it later on, which was just not a problem. That was the first major TP, second major TP is there. Up there like that. So this was in May, June, July, August, September, like that. But the first major TP was here, which was actually hit, as you can see, from March what? Up until July. It was pushing in one direction, right? Pushing in one direction. All following institutional price action. There is a way of even scaling into trades along the way there as it will be going. There's a way, obviously, because on the 4 hour, this is now your change of character. So once the change of character happens, they actually are induced to the downside. Let me just show you where the downside thing happened. Something like this, right? Then they pulled back. Then they came and broke structure up there. So here, even on a 1 hour or 15 minutes, you would have even seen this very clear buy. Once it does that, you wait for the pullback here. You could have also scaled in more buys there. After entering more buys, you can target this or target our ultimate level, which is up there. Even here, there was also another entry as well. After inducing like this, after inducing like that, because they haven't reached our ultimate target, so they'll still maintain bullish order flow. So even here, they came back and reduced to the upside, making this a leg. Once it is made, once it's made a leg, if the market comes back to it like this, that's also another entry. Notice all these other entries. First major entry, second major entry, third major entry, up until TP was hit. Notice how consistent it is, how accurate it is, how straightforward it is. As easy now, it's looking easy because the person who is showing you this thing has mastered what they're doing. So here the next cycle happens again because now we're now in bullish order flow, right? And remember our ultimate target is here. The same thing that happened here, we have to induce first, which is our inducement leg is here. They induce first. Once they induce, they have to tap in and tap the level. Then once they tap in and tap the level, they now have to let me just put this here like this. Okay. Right. Same principle, same principle, same cycle. It's just a repetition of a repetition of they're now just repeating and repeating and repeating and repeating things, the same thing over and over. So here, after tapping, because that was our extreme demand like that, this is now our higher high internally. But our overall target, don't forget, is that one. We are pushing there. That's why we're still maintaining bullish order flow. So this will be our short-term target. Then that one will be our higher time frame target. Right? Then we push. Here you can go to 4 hour to identify how you would have entered that simple trade. So here, the first thing that you could have done, you would have entered even here upon this adjustment before even the overall change of character to the upside on the 4 hour, which is this one. You'd have actually entered the buy immediately there. Even on the 1 hour and even 15 minute, I believe they can actually also give you a very clear, clean entry to that particular move. Very clear, clean entry. Let me go to 15 minute. 15 minute. Let me see if there was any other. Right, 15 minute, obviously, yeah. 15 minute, obviously, it confirmed earlier, which was this one. 15-minute inducement before our overall 1 hour or 4 hour adjustment. So there it was actually our Q, which was our first entry. First entry type, stop loss, you could have put it just here. Then you hold up until, so the more those 1 hour, 4 hour, the more they now do their confirmations, like after the 1 hour like this confirmed like this, you now know that indeed we're keeping on going up. We're going to put stop loss to break even, right? Then you just hold the trade. Your ultimate target, remember, it isn't first major ultimate target is there. Notice the risk to reward, so crazy risk to reward. 1:100. 1:100 risk to reward. Very, very crazy. It only happens, it's only possible once you understand institutional price action, not with your normal retail price action. There are certain levels and certain dimensions in trading that you never get to with your normal retail price action understanding alone. It's not good enough. It's not good enough. I even tell people that true financial freedom in trading, it comes once you have an understanding of institutional price action. Your normal retail price action alone, you always be a victim. So yeah, they kept going and going and going and going up until TP was hit. TP was hit. This was from October last year. October, but this was now in December. They kept pushing towards that. And as they were pushing towards that, remember, going back to the daily is very essential because it's always a cue to also help you even maximize on those. So eventually they tapped our overall structure there. You could have simply locked profits here. First lock here. Second lock is here on the higher lows, on the internal higher lows there, because there once they induce, that's when they'll do their major pullback. So you can see that even they didn't take you out. Even here, they didn't take you out. They made this new high and this new low to put your stop loss here. So right now you can even lock all your profits that you entered here in October. So even maximization, it comes through institutional price action understanding. So the whole of last year, these were the main trades for last year in 2023. No, nothing bullshit. Obviously, there's a way to enter this counter. I won't talk about that now. We'll talk about maybe in the next episode to enter how you would have been entering this counter, so that you maximize how to enter with the move, with the momentum, as well as these counters. So that will be a topic for the next video. Make sure that you subscribe and you like the video and you don't miss the next episode. It's going to be epic. So these were basically the main trades for last year. This buy, main buys for last year. This counter with basically these sells. There was a way to enter the counters, obviously, which is a topic for another day, or the next video, which is basically going to be uploaded tomorrow. You also get how you could have actually maximized on the counter trades for last year. Then also done with counter trades for last year, you actually maximize on the momentum trades for 2022 as well as the counter buys. So by the time we will be done, you will be so much shocked. Your mind will be blown away of how much you are missing out simply by not understanding institutional price action. Notice I didn't place any trend lines here, but I was showing you some crazy ass entries, crazy entries, crazy entries on the market that your normal retail price action trader cannot even identify. I know how to use trend lines and all that, but that's too limited. There's a lot of a lot of information that you won't even know, a lot of entries that you miss out simply by not understanding institutional price action. So guys, see you in the next video.